All right. Got my coffee. Comment allez-vous? How are you? Let me move my windows around. Got to move this over there, move that over there. Got to have the chat. Got to see everything. Hang on, I'm organizing. Jojo. Good morning, Wayne. You're a man that changed my life. Thank you for every video, every lesson, and all the guidance. Absolutely my pleasure. Absolutely, totally my pleasure. All right, so how's the sound? Are we okay? Yeah, I hope so. Okay. I suppose we should get going. Welcome to Forex.today, the YouTube community of more than 20,000 foreign exchange traders. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. I'm an economist. Yeah, I actually have a degree in macroeconomics. Yep, so I think that makes me. I'm a trader, I'm an investor, right? All kinds of things. Anyways. What do you want to do today? Gold, oil, Bitcoin, stock markets? What do you like? You like the Dow? You like the DAX? Nikkei? FTSE? What do you want to do? What currency pairs do you want to do? What commodities? Let me know. Do you want to do crypto? Let me know. So I'm into it. Whatever you want, just let me know in the chat and I will do my best to serve. I've been trading for about 20 years, so I got some experience. Also, we can cover the fundamentals. I run an organization called QuantBox. We can also do technical analysis. And in fact, if you want, maybe we'll do that today. You can post a trade plan and I'll give you feedback on your technical analysis. So instead of me going through my charts, I'll go through my charts, but we can also go through your charts. And this is a way that you can get feedback. So there's a lot that we can do here. So anyways, thank you for being a subscriber. Thank you for clicking the thumbs up button and just, helping me hit the YouTube algo, whatever that is. I'm just here to share. And here's the cool thing. Here's what's in it for you. The more people that learn how to trade properly, the more that you understand how they're going to behave to certain price levels and price action and such. And we can all win. If we're all doing the same thing instead of like fighting each other, if we're all doing the same thing, we're all going to win. So anyways, help me share this wisdom with others by making YouTube work. So anyways, thank you for being here. Let's move on. If you want a broker that doesn't trade against you, try Trader's Way. If you want a broker that actually wants to develop a symbiotic relationship with you, meaning your success becomes their success, try Trader's Way. If you want a broker that actually wants you to be an educated, patient, disciplined trader, try Trader's Way. Like I said, there's a few other resources that I'm associated with. So Investor Bootcamp, that's where you know me from most likely. Used to be FX Bootcamp. Now we cover other things. It's $88 a year, bro. Okay? Yeah. Right now, we're in the midst of a stock trading course. I'm loving it. Really, really cool. So anyways, that's investorbootcamp.com. Like I said, I own an organization called QuantBox that automates your macroeconomic research. Why should you care about that? Well, because you actually know why money is moving around the world. You'll have the confidence to let your winners run. And then a tool that we're going to use today, because QuantBox is fundamental, right? We're going to do some technical analysis today, and this is another website, or in this case, technology that I own. It's artificial intelligence, yeah. You submit a trade plan and it'll give you feedback. Your trade plan is on one time frame. You'll get actually feedback on 3 different time frames. But the cool thing is you can get feedback from other traders. Your trading plan is completely anonymous. Nobody knows it's you. But people can review it and agree and disagree. Like 2 people agreed with this one. That's nice, right? Cool. There's no comments and stuff, and there's not, it's just good. I'll show you how to use TradePlans.ai, and I'll show you why it's better than learning how to trade on a demo account. This is better. So anyways, go ahead and post your trade plan. It's free, it's quick, it's easy. There's no monetization at all. Okay. So anyways, we'll do some of that later. So go ahead and post your trade plan now. Okay. Okay. All right, so let's take a look at the world. Where are we? By the way, how's the tie? You like the tie? Is it working? It's good? Yeah, I think so. It's sort of a spring tie, and it's cold here now. So I don't know why I went that way, but nonetheless, let's take a look. These are medium-term indices. Let's go to a longer-term indice. Okay. And this is a move to dollar weakness that are projected to happen around September. And then sort of worst case scenario, it would happen around October. Here it is November, and it maybe is setting up. Maybe. So what do you think over the next couple of days? Yeah, probably, maybe, probably. All right. So one thing to make clear, I suppose, is that tomorrow we have CPI. Okay, CPI is going to be lower tomorrow. Why? Energy. Not policy, just energy. Energy prices have collapsed, okay? So CPI will be down, energy will be down. And for some, they're going to say, oh my God, the Fed's policies are working. No need for the Fed to raise interest rates. Well, it's true. The Fed doesn't need to raise in December if we have a low CPI print. And do I think we're on our way to 2%? No. But, maybe we'll settle around 2.8. So who knows what it'll be tomorrow. I mean, it's not going to be 2.8 tomorrow. But nonetheless, CPI down because of energy. Therefore, inflation is down. So then rates don't have to go up. So you can do like rates up and then go niet. Right? Does that make sense? That's my thought anyways. Okay. Oh, thank you, Ashish. Yeah. So anyways, so if that happens, then the stock market, okay, so let's do S&P 500. Guess that should have been in blue, but anyways, up, and then US dollar down. Okay, and there you go. Jumbo! Okay, so we'll see. Is this the narrative between now and the end of the year? Maybe. Luis says S&P 500 is trading in a range. Okay. Bounce mode so far. Yeah, I see that. Okay? So we'll see what happens tomorrow, Luis, right? That's really going to be the trigger. This is Swiss franc versus everything. Falling Swiss franc is risk on. So if the Swiss franc is falling, you could argue that maybe the S&P 500 is going up. Or maybe the DAX, if you prefer. Okay? Happy Diwali! Yeah, happy Diwali. Right. So anyways, we'll watch for that. Japanese yen on the move. Oscar Mike. Let me move this even further back if you want. Okay. We are trending down, son. Sure. What does risk on and risk off mean? Sure. Let me, the best way for me to show you is log into QuantBox. So let me go to quantbox.co. Let me log into the Google Cloud. Let me log in with the proper email. Rolling. Okay, logging into the Google Cloud. Morning, Maida. Morning to you, Richard. All right, so the question, risk on, risk off. So if you go to risk gauges, okay, it actually explains it. So let me zoom in here. If we go to the bottom, in a risk on situation, optimism in the stock market. Okay? When there is optimism, money goes into assets. People actually deploy capital. They invest. And they put money into things like Australian dollar, New Zealand dollar, Canadian dollar, Great British pound, gold, Europe. We call this aggregate demand. And what do they fund these transactions with? The de facto reserve currencies. Now, obviously, US dollar is a reserve currency. Swissy is a safe haven, so you can consider it something similar. And Japan is sort of traditionally it used to be a reserve currency, but it is still a funding currency. And right now, because it's so cheap, and the central bank is actually making it cheaper and cheaper and cheaper. So what you do is you use these currencies to sort of leverage these other ones. Because you can borrow these for super cheap and plow it into these assets. So when there's risk on and there's optimism in not just the stock market, but that's an example, but for investing, when there's optimism, like you can take some risk and you're quite certain you're going to get reward. That means you're like, all right, I'll take the risk, baby. It's worth it. Risk off means, the opposite of where market conditions exist in which things seem bad. You feel like you're going to lose money. You think you're going to lose. So what do? You say, well, give me my money back. Right? So you sell all your positions and you pay back your loans. And money flows the other way. So you can look at it like this on how, okay? When times are good, you borrow money and you plow it this way. Okay? You plow it this way. And then when things are over or done or market conditions change from good to bad, you cash out of those positions and you pay back your loans. Loans being just leverage. Okay? So there's a direction to this. Okay? So like when Americans feel good, they feel rich, they have a good job, they're making good money, inflation is low, they expect good things in the future, they spend money. Okay? And they go to a place called the Walmart. Well, when you go to the Walmart and you buy stuff, you're buying what? Crap. Crap made in foreign countries. It's cheap. Hey, it's the Walmart. So everything there was supposed to be cheap. By the way, I visited one over the weekend. It's not cheap anymore. $20 for a t-shirt at Walmart. Anyways, so what are you doing? You're selling your money so that you can buy some crap from Walmart. But foreign money, right? And so really what happens is your money eventually makes its way to the foreign countries. I'll just put international. Okay? Money leaves America and imports stuff. How about that instead of crap? So Americans get stuff in return for their money. But the money leaves the economy and gets converted somewhere into like Chinese RMB, for example, renminbi. Okay, that kind of stuff. So anyway, so when things are good, the dollar weakens because you can get a foreigner to make stuff, provide products and services for you for cheap. That's disinflationary, by the way. So anyways, think about it that way on how. That's where the risk on, risk off comes from. Now, from an investing point of view, you feel good about the stock market, let's say. Well, if you feel good about the stock market, okay, you're still converting cash into a financial asset. In this case, if you take that and put it into the aggregate, you're converting your dollars into anything but dollars. Okay, risk on. And then when things are bad, you're like, give me my money back. Okay? In particular, when foreigners are doing the same, because it's a reserve currency and when things are bad, they want to maintain their reserve currency. Okay? It also has to do with global trade and trade imbalances, surpluses versus deficits. And so some countries that have a trade surplus means they get paid by foreigners in some other foreign currency. And if you maintained, let's say, $100 billion of foreign currency at your central bank, and all these currencies are fluctuating like crazy, well, that poses risk, management risk, and exchange risk. And then also, if you're a business and you do business, like I knew someone in Atlanta who did business in at least 27 different countries. Imagine doing business in 27 different countries, right? With 27 different currencies. Well, the world doesn't want that. It's too complicated. You can't even figure out what the price is, and the price on something is moving all the time. So what you end up doing is just say, okay, we all agree. Let's just do business in dollar. Even though it could be Canada, okay, doing business with Thailand or something, right? they're like, let's just do business in dollar because, figuring out Thai baht and the Canadian dollar and then this, and then, another country, another currency, another currency, another currency, another currency. Nobody wants to do that. Central banks don't want to do it. Businesses don't want to do it. So anyway, so they just agree, let's just everybody keep dollars in reserve. Okay. And that shows sort of the ebb and flow of capital when it comes to trade balances or imbalances and all that. So that's a long-winded answer about risk on or risk off. Okay? So when things are good, Americans spend their money to buy crap from Walmart. All that crap in Walmart's from a foreign country. So dollar leaves America, and America gets some stuff. You like your t-shirt from Honduras? Good. You sold out the dollar. You sold the dollar. And you got yourself a t-shirt from Honduras. Okay. Hey, good morning, Michael. Thanks for my commitment. You are very welcome. It's an honor to serve each and every person here. Even though only half the people have clicked the thumbs up button. I'm not saying, I'm just saying. All right, so that's the first step, okay? On how the risk on, risk off idea. Now, then you have to decide, are we risk on or risk off? Now, if you could read the English, right now, if you could read the English, QuantBox makes this easy for you. But it's anything but easy. So, for full transparency, I like to explain how we get to this conclusion. First thing is you need to gather the data. And so you got to get this from, data providers. Good coffee. All right. So the first thing you want to look at is, the way we do this is you create a basket. Okay, you create a basket of stuff to identify risk on or risk off. You look at different assets that are trading, and in particular the change, right? The change in trading. And you understand the relationship between risk on and risk off. And then you score each one of these. But then you want to do all of that, which means you have to pull candlestick data for all of this and put it into a database, and then have an algo that says, this change is good or bad, and then give it a score, and then you add up the score. But then you want to do that on 3 different time frames. You want to do this on a daily basis, a weekly basis, and a monthly basis. So now that's a lot of candlesticks. Do you understand that? We got to pull the candlestick data into a database and then run algorithms on them based on, the perceived correlation of good or bad. Like, for example, what does the VIX do? What's the VIX doing, and is that good or bad? Well, you have to put that in the algorithm, right? So anyway, so let's go back. And what you want to do in deciding, and really, look, you don't need to pay for QuantBox. QuantBox makes it super stupid easy. It makes you look smarter, makes you look taller and thinner, makes beautiful people laugh at all your jokes, okay? And most importantly, it gives you confidence. But you don't need it because you could just decide, what do you think, risk on or risk off today? Well, QuantBox does, so you could just decide, and you can guess and all that kind of stuff. But what QuantBox does is it looks at what the Japanese yen is doing today, this week, and this month. In particular, the change. So the Japanese yen is a little bit weaker today, not much, so it gets a score of 0. A little weaker over the last 5 trading days. So it gets a positive score because, like I showed you, when things are good, the yen weakens in the same way that when things are good, the dollar weakens. It's a pseudo reserve currency. So a weak yen tends to mean the German stock market goes up. I know you're like, it doesn't even make sense. Well, it does. It's just capital flow. Don't think of it as logic. It's just capital flow. Okay? And over the last month, the yen is a bit weaker, even more weak, right? And that is continued to be seen as good. And here is flat. Okay, then you got to look at the change in yields, and in particular for the risk-free rate of return, otherwise known as the 10-year T-note. So what's happened so far? Well, the market's not open, so it's flat. What about this week? It's down a bit, but not a lot. It's flat. And this month, it's flat. So it's benign. Does it mean risk on or risk off? It doesn't mean either. Nothing has changed. Now imagine looking at this yourself and storing all of this of like what's happened today, this week, this month, today, this week, this month, today, this week, for all of this stuff, right? The dollar index currently flat today. Okay. Positive a little bit this week over the last 5 trading days. That's bad, as I showed you. But over the month, it's weaker than it was 30 days ago. Okay, remember, rolling 30 days. So a bit of a mixed bag, but on the longer run, there's signs of optimism. If the dollar's weak, that means people are converting their dollars into assets, investable financial assets. Okay? Or maybe Americans are going on fancy pants vacations. Okay? With their Instagram models. All right. What about gold? Market's not open today. Flat. Gold's down this week, 2%. Okay, that's positive. Okay? And gold is up slightly, and that's negative. See, if you'd rather dump your dollar and buy gold, it's sort of it's a different place psychologically. That's why it's there. S&P 500 up this week. That's good. I think we can all agree that. S&P 500, right? Or up yesterday, Friday. Up today, great. Up this month, great. That's all good. So add a 1. VIX. VIX. You might think of it as volatility, and it is, but it's measured from investors of the S&P 500. So imagine you have $1 billion invested into the S&P 500. Okay. And suddenly you think the stock market's going to fall as much as 15%. So actually, that should be a negative, okay? Negative 15%. What do? Do you sell your $1 billion portfolio you spent 10 years accumulating? Heck no. Because you also think in 5 years or in 10 years, it'll double. You'll have $2 billion. So you're like, okay, well, this is just a little hiccup. But you also are worried, like, what if it fell 50%? Well, you can't let that happen. Your investors would freak out. So what do? You hedge with options. And you would only do this when you were afraid. Like your neighbor's house is on fire and you realize you don't have house insurance. Okay? You call Jake at Progressive and you're like, I need fire insurance on my house. Okay? So when the VIX rises, it has to do with this sudden change in options. Because this investor with $1 billion can hedge their position with options, and it's cheap. Okay? Oh, dude, Roderick asked about the stock trading course. It's very, very detailed. Okay? So anyway, so when it comes to options, people only buy options when there's fear. So there was fear this in the last trading session. That's bad. Okay? There was some fear, but not a lot of fear over the course of the week. So fear showed up on Friday, but over the week, no, it's up, but not dramatically. So it gets a score of 0. But over the month, you remember a month ago when we had that geopolitical risk that freaked the whole market out? Well, that geopolitical risk has come down quite a bit. Well, to say it differently, many of the options that were purchased to protect the cash position in the S&P 500 have been removed, and that's good. There's less fear. Now, fear comes and goes and can come and go quickly. But what QuantBox is doing is watching this number in real time on 3 different time frames, and then including it in a basket of other things that it's also watching in real time on 3 different time frames, and then creating a score. And so when we look at this, when we roll to the up, okay, positive score of 3, positive score of 2, and this market hasn't really opened yet. So flat. Okay, flat. That's some flat, not fat. Okay, so ever so slight risk on and a little more risk on, but not anything dramatic yet. But a few days ago, it was mixed. So it's risk on is returning. And then QuantBox says, bro, if this is risk on, consider thinking about maybe buying euro. Now, this isn't looking at these assets. This is just showing you what typically would benefit from a flow of capital. It's not analyzing anything. It's just saying under these market conditions, very often these things appreciate. So go check out Aussie, go check out Euro, go check out CAD, go check out Kiwi, go check out gold. Okay, go check out S&P 500. And maybe you can get some dips. You know what I'm talking about? Okay. Yeah, so who wants a free lecture from the stock trading course? I have one up there. I have one. I'll have to look for it. But who would like, it's a 90-minute lecture, and it's legit. Like, I mean, it's just it. It's just, I did it, and when I was done, I thought it was so important that I made it free for everybody. But I didn't, like, plan it to be like an advertisement for the course, and there's a lot of little salesmanship in there. There's none. Like, it's just so important, I think everybody should know. Let me find it then. Investor Boot Camp. Party. Oh, well, let me just show you this since it popped up. Hey, we're having a party. Oops, I'm trying to make this smaller so I can get in there. Hang on, I got to manage all these different things. We're having a party. Come join us live. Come take a selfie with the Wayne. Michael, we'll probably do something like that next year. Michael, do you have a stock trading course? So let me. Oh, you know where the. Oh, I know where the free course is. Hang on. Of course, I should know. Do I have YouTube open? YouTube. Talking about YouTube. YouTube. All right, I got to get a YouTube going. Hang on. Of course it's there. I know where the free course is. Hang on. YouTube.com/ I have to go to Forex Today. All right, here we are, everybody. Here we are.
Do you trade options?
Oh, an ad.
Access deeper liquidity. I'm
logged into, oh, I see, QuantBox. Okay, skip the ad, everybody. All right, more. MOA. Look at these ads, wow. All right. Where is it? 90-minute lecture on risk versus reward on trading stocks. Okay, not very proper English, but it's right there. Okay. It's a very simple website. Just put your stuff in there. Boom. Which stock is more expensive, $80 or $8? You know it's a trick question, of course, but I will do the math for you. Emerald, are you coming to Nashville? Michael says not enough info. Yeah, so I'll teach you how to answer the question, though. That's what's most important. Emerald's coming to Nashville. Who else is coming to Nashville? It's going to be epic. We're going to have the beautiful steak dinner. I'm going to get the Wagyu ribeye. It's going to be good. Come to the party. So that's the risk on, risk off idea on how did that sort of clarify a little more? Now here's how it's explained on QuantBox. The risk meter combines the price action of various risk-on, risk-off assets and measures risk sentiment of the overall market. Okay? Yeah, awesome, man. Meta, it's indoors and it's warm and beautiful and tropical like your home. It's going to be just like home. Once you get there, you will not have to step outside. You guys should see this hotel. Opryland Hotel. Images, let's say. You should see this place, guys. It's insanity. Yeah. Okay, look at that. Look at. We're going to get a picture of our group in front of the waterfall. Okay, there's one of the restaurants. Right? Is that a river? Yes, it's a river. Okay, and just to show you, there's where I got my picture. You can go on boat rides. Oh, what's Asif doing? Anyways, come on, guys. We'll have fun. It's beautiful. We're going on a boat ride together. It's insane. Huh? Like they say, only in America. Or Dubai. Yeah. Yeah, it's going to be so good. Come on, come on. It's just one night. No, Maida, you just hire someone, wrap you up in a mink coat and usher you from the airport to the hotel. Yeah. Yeah, it would be a great honor to have you there, for sure. For sure. It'd be so amazing. And then, yeah, then we'll swing down, we'll come your way this spring. So what I'm thinking is either a cruise or Miami. I'm starting to really hate hotels. So we'll do Miami-ish, something like that. And then in near, sort of for the June Fed meeting, we're going to do the Harvard Club of New York. Okay. And then I'm thinking in the fall, we'll do the Federal Reserve Room in Jekyll Island, where J.P. Morgan created the Fed. We'll go in the same room. So it was J.P. Morgan. Who else was there? Pulitzer. Who were some of his other cronies? I'm missing another guy. Anyways, they're all there. What was Asif spamming? Oh, yeah. No, well, he was excited. All right. Cool. So anyways, I hope to see everybody there. All right, so let's kind of look around the world. What time is it, Wayne? Oh, it's almost 9. All right, so let's go to commodities. See if the markets are opening yet. Not quite. Let's go into a smaller time frame. And I'm long the oil. I'm long the oil. Yeah, we'll see how it's going. Oh, I did it twice. Niet. So I'm just showing you the math going on in my price action pivot points. Okay. So I created price action pivot points because I didn't want to draw this twice like I just did. Plus I wanted to update automatically. Smart, right? Yeah. Okay. Cool. So I am looking directionally up. Okay, on the 4-hour, I see that this is a counter trend zone. So it's hopeful. And I really don't like trading this way. I don't like trading on hope. So if you were a technical trader, let me explain why I don't like trading on hope. If I was a technical trader, in particular a trend trader, I would sell it at precisely the price I bought it. So that's the problem, right? And if this trade fails, I'm going to take a walk from this thing. And because if this doesn't hold, I don't see why we can't go down to this area. And that's a $10 drop, y'all. Okay. Yeah, Maida, although Maida says I might like the Biltmore. But the thing is, like, I like old hotels, and I've spent quite a few days, actually, at the Hotel National. I don't know. I like the hotel in Havana. I don't know, for different reasons than the hotel, or that it's old. I mean, a lot of it is the fact that it's Cuba, right? And the people are so nice. Like I said, when we were on the side of the road, we bought a giant avocado because it was the biggest avocado we had ever seen. And my buddy's walking through the lobby of the hotel carrying his baby because it's the size of a baby. It's an avocado. And the staff noticed and said, "Oh, you like avocados?" "Yeah, I like avocados." "And where did you get that one?" "Oh, we got it over here. It was so exciting. It was the biggest one." And they actually cooked it for him. They prepared and everything. It was just out of kindness and curiosity. And I'm like, dude, I love this place. So, the Baltimore might look like it, the Biltmore might look like it, but it may not be the same. And I don't know. I don't want it to ruin. Like, what if it was better? I highly doubt it, but I don't, there's only one Hotel Nacional, right? So I don't, So I know what you're saying. You're probably right, but I think I don't want to go, if that makes any sense. So that makes, South Beach, if I'm in Miami, somewhere close to a cigar bar, and then the Breakers. Or is that the one you mean by the Biltmore? Maybe the Breakers. You're right. It's Breakers that looks like. Anyways, I've always wanted to go there. I thought it was a copy of Raffles. Maybe it's not the Biltmore. It's, yeah. All right. So, yeah. All right. All right, cool, guys. So that's what I'm thinking. This is a hope and a prayer strategy, which I don't recommend. But don't do as I do as I say. Okay, so I'm trying this. I'm trying that, but it's not great. And technically, if you're a trend trader, selling would be better. Oh, is that right, Made it? The Biltmore and Breakers? You mean it's the same name for the same hotel? Or the two hotels both mimic the Hotel Nacional? It's the same thing? All right, the Biltmore is the Breaker. Boy, yeah. Cool. Yeah. I've always wanted to go. I'm just worried now that, yeah. Yeah. Oh, yeah. All right. All right. So anyways, so we got to watch that today. Anybody here trading oil? Say yes or no. How many people are going to be trading oil today? Just say yes or no. Yes or no. Yes or no. Yes or no. Johnny's on it. Yes or no. Yeah. Yes or no? Made it as like maybe a buy. Yes or no? Yes or no? All right, thank you. I appreciate your response. Cool. See, if nobody cares about oil, we'll skip it. I like oil. For me, gold, oil, and dollar are kind of all the same thing. So anyways, it's a shot in the dark. It's not a good trade, but part of my logic here is not just the 1, 2, 3 that I highlighted, but it's more like if, right? It has to go up from here or we're heading all the way down there. We're just at sort of a price of which if it's going to go up, it really needs to go up now. And if it doesn't, then and I said this a week ago, that I wanted to go long if it reversed in that area and there was no plan B. I hope you remember that. I said there is no plan B. Plan A works or I walk. Yeah, Johnny's already at break even. Yeah, I know that's a problem with this trade. I know it's not a very good entry. I don't know, but shit happens, right? It didn't work out the way I wanted to. But, so I could see how you could be in lower. Like, my thought was this one. I can't remember. Something went wrong. I couldn't do it, or I wasn't there, or I got, I got pulled aside. But nonetheless, I ended up missing it. So somewhere I caught a pullback, and I think it was like probably this one. So the way I looked at it is it's not a good trade, but a couple of things that make it not terrible is it did double bottom, it did higher high, and I'm essentially in at the mean. So I have an average price, which means it'll come down and I'll lose a little bit. Then it'll go up and I'll make a little bit. And then it'll come down and I'll break even. And then it'll just slowly, ever so slowly pay off. But Johnny's probably like here and at break even. Yeah, I gotcha. And especially after this move here, okay? Once this cleared, you can move the stop from down here to down there, and let the winner run. Yeah. Gold, I'm interested in buying, but not at this price. And it looks like the next move down is 1888. Now you might say 1900, and I get it psychologically, and that probably is it. But technically, it's not the best price. But we all know the role of psychological levels, especially in things like the stock market and a broad thing like gold, like a broad commodity. Like many market participants do no analysis at all. They just say things like, buy it at 1900. Okay. I'd like to buy it at 1800. If it goes down there, and then maybe jam it. Put a trade on for the ages. I have a memory inside the Wayne brain of me standing on the trade floor. I believe it was Vegas at the Investors Expo. And I was paid by a broker, Interbank FX, to speak in their booth to get a crowd. And I'm like, oh, I'll get you a crowd. And so anyways, and they rented like, it was huge, right? Marilyn McDonald put it on, and she just, it must have been 6 spaces all joined together. And anyways, they set up a little stage. And we were at $650 an ounce for gold. And I had a bullhorn. Bullhorn! Now hear this! Right? And I'm on the speaking into a bullhorn, buy gold at $650. Yeah. So anyways, I don't think we're on our way down to that yet, but it'd be interesting if we did make our way down one more time. I don't know if we will, but okay, we'll see. Is it going to go down to 1,000? Probably not, right? Probably not. Then you'd mark this. Well, what do you think of this area? 1382? Maybe. And then so you kind of get into these other zones. This price was important. All right, let me use a drawing tool. Okay, this price was important. This price was important. This price was important. There's something going on here, but this one seems more primary. Okay. So where's that? 1600? It's hard to believe now. Okay. It's hard to believe now. If the dollar's strong, okay. If the dollar gets strong, then, you don't need as many dollars to buy gold. Oh, look at my WTI. Go, you son of a... Nice. Market's so, right? 904, and we got the skyrocket. Sweet. All right. You guys want to do the stock market next? Yeah. Type 555 if you want to do stock markets. 555. Type in 555 if you want me to do the stock market. 555. 555. So much easier. Just go click, click, click. 555. Enter. 555. Enter. Yeah, YouTube tracks something called chat rate. And yeah, it just went from 1 to 8. See? I appreciate that. I guess a chat rate might be good. All right, so yeah, I will zip over to U.S. stock markets first. Nah, let's do them all. Let's do them all. Okay. Let's do them all. Okay, let's start with Euro. Boop. Let's start with the Euro 50. It's a mediocre setup for the bulls. Okay, we had the up, the down, and this is not good. This is a reset. But that was supposed to get us up there, and it didn't. It did give us a higher high. So you would expect a higher low. You'd take this and you'd drag it across. And that did work. And we're just ever so slowly. I mean, this sucks. And, right? Because it's kind of a top and it's an M3. So that's where bears are going to sell. But we're riding the 21. And so it doesn't show strength. And for those that invested down here, their target is up there. But if it was going to roll over, okay, if it was going to roll over, this is the price. But I'm a trend trader, so I don't think that's likely. So Euro 50 is mediocre. It's mediocre. Morning, Andreas. Okay, but, ride the 21, baby. If you're above the 21, you're bullish and aggressive. Let's change the time frame. And, yeah, to me, usually what happens is in this situation is that it waits for the 21 to catch up. Okay? Just waits for the 21 to catch up. All right, so let me give you a couple of clicks in and see if we can look at it even more closely. Okay. So we have a kickoff to 21. Okay. That's where it flipped from bearish to bullish. Bearish, right, to bullish. And then this is technically bullish now. So it was becoming bullish, and then technically it is bullish. Now, if you bought my book that I wrote in 2006, 2007, which was released 2008, I said in this situation, after this move, you buy here. Oh, yeah. And now, you sit, you hurry up and wait, I suppose, right? So you're looking for this to kind of little sort of mini consolidation and then the higher high, higher low. Okay. Not so bad. What do you stink? Smell like a plan? Okay. Andrea says, sell pound yen. Well, I would never want to own yen under the regime of the Bank of Japan's yield curve control. It's also unseasonable. It's also risk off. And I don't really want risk off. So you might have a good technical setup, but without me even looking at it, I don't prefer it. Okay, Andreas. So are you familiar with yield curve control? Oh yeah, that's right. That's right. Thank you, Jim. See, Jim, so good to have smart people on your team. Yeah, so there you go, Andreas. Type in yield curve control, Bank of Japan. All right, I forgot about it. We are going to review some of your trade plans today. Please visit tradeplans.ai. Totally free, no monetization, no advertising, no subscription, no anything. There's nothing. All I have is AI and this front end. And as you can see, by and large, everybody agrees the front end sucks. But cool. So post a trade plan and we'll talk. I'll give you feedback. Okay. Also, by the way, could somebody leave a positive review under testimonial? If you've been using it and you legitimately like it, would you be so kind? Yeah, the site is not too pretty, but it works. The people that built the website built the back-end AI, and the AI is amazing. But they're not full-stack front-end people. Anyways. And just to calm everybody's nerves, all your posts are completely anonymous. There's no name here. There's no account number. Okay? It's all anonymous. The second thing is the feedback you receive by our AI is not posted anywhere. It's not like people can somehow, get in and see your feedback. It's all private. So Aiden, our AI, will email you personal feedback. That's it. You get an email with personal feedback on your trade setup on 3 different time frames. It's cool, and it's instant. And you wouldn't believe the amount of work that goes into this. So I have millions of candlestick data. Millions that we feed to Aiden. It costs me a lot of money actually to have this sit on the Amazon cloud. And it's free. I don't know. I'm either terribly generous or stupid. So please use it. All right. So anyways, thank you for bringing that up, Jim. I appreciate that. So I will run through your trade plans and give you feedback in a little bit. Japanese stock market. Let's take a look on the 4-hour. Okay. And it's doing very well. Okay. And what do we have? Okay. Bit of consolidation. Two standard deviations from the mean. What's the next move? Depends if we break out. Okay. So top, higher high. Top, higher high. So you're going to have two thoughts here. Japanese stock market's going to come down, and that pound yen would come down with it. The other thought is inside this mini trend, we break out and work our way up. Okay. So maybe Andreas is right on this one. If it's the down issue, or scenario, I should say, then the yen would appreciate, and I don't mind selling the pound. Okay, but of course, then Andreas, if you posted this on TradePlans.ai, I want to see something that's specific. If you were going to try to do that, you would probably start marking stuff like this. Okay. And your trade plans, would be executed almost like where we are now, in fact. Your trade plan is this. And down for a very long time. Yeah. Well, just scalping. Look, I don't mind scalping after you have a strategic plan. You can scalp all you want. Love it. If you don't have a strategic plan and you're scalping, in my humble opinion, and I am convinced of my opinion, you're an incomplete trader. And just scalping is you're risking your money and wasting your time. Yeah. So anyways, if I'd rather you think, have a little additional research. And if you said, okay, as long as the Japanese stock market is falling and you believe you have a target down near 30,000, okay, then the Japanese yen would strengthen and you would be trading them together. But the thing is, obviously, it's not going to drop that far that quickly. And so your yen pairs could drop, let's say, 1,000 pips. Why would you be going for 25 pips if you just did some basic analysis and said, well, if it does fall, there's 1,000 pips per trade on this. Maybe you can get 5 trades. Like the total move, if you had 10 trades, could be $10,000 over a month. Well, I would rather you do that. And what does it take to do that? Just a little further analysis. And then you can scalp all you want as long as it's only sell the rips. and let the winners run. Richard says scalping's good for leverage players. No, I don't. I don't believe that to be correct either. Really, whether you're leveraged 20 to 1, 50 to 1, 100 to 1, 200 to 1, it shouldn't matter. If you're relying on leverage, the attitude is, well, you ain't got any money, so you got to use leverage. Well, you know what you probably have is time. So why don't you successfully trade and grow your trading account over time instead of with leverage? Well, Wayne, I got to get rich quick now. Well, that's an impoverished point of view. It doesn't lead to value creation. And 999 times out of 1,000, it leads to complete loss of capital. It's a mirage. It's fool's gold. It doesn't even make mental sense. And then if you did the math and such, it doesn't actually make any sense. So what I'd rather you do instead, right, Richard, is, and you know this speech, Richard, so I know you know, so I'm not necessarily talking to you. I'm talking to everyone. I'm even talking to myself. The point is to have a point of view. And you say the Japanese stock market looks like it's going to fall 3,000 points or 10%. All right, cool. So it just doesn't make sense to leverage up and try to make 20 when you've done some analysis and you believe it'll go 3,000. It just doesn't compute for me. So what I would do is, let's say over a period of a month, you do 100 trades. And each one are scalps. But every scalp is short only. Okay, so you're directional. You have a directional bias. Different now. See, typical scalping doesn't have a bias. I want you to have a short bias in this case because that's your theme. Now, as soon as this sucker makes a higher high, game off. You stop. You never bet against the market ever. But if it heads south, you would engage your strategy. Okay? And you do scalp after scalp after scalp after scalp after scalp after scalp based on your scalping technique. It's a tactic. Scalping's a tactic. It's not a strategy. But if you say your analysis of the Japanese stock market has a 10% decline between now and the end of the year, and then that's your strategy. And now tactically, you're going to enter short scalp, right? Short only scalps. And now on top of all of this, you jam your stops at break even. Which means you're going to get a lot of break-even trades. And you exit down here. Let's say, and you exit these trades at 3,000. Or at 30,000-ish, whatever. You pick your number. We're at 33,000, so you're like, okay, 10% drop. And I'd like you to do this, let's say, 100 times. And, you're going to okay, break even here, and then you get another one here. Okay, so you're in here, out, okay, in, You'll probably in and then out, and then out, out, and then in and down, and then in, and so on and so forth. And hopefully you have, like, let's say 33 open trades and 66 break even. But your average winner is hundreds and hundreds and hundreds of pips. Maybe more on some of the early trades that survived. And you'll do better than a scalper. You'll do better. It's the same technique, but a different strategy. So if you're good at scalping, oh my God, you're going to be an amazing trader. But also, macro traders like George Soros, for example, and you might love him, you might hate him. But here's the thing. He doesn't scalp. And he might have $1 billion more than you do. And then you'll be hard-pressed to find a $1 billion scalper. And if you found someone making that kind of money, they have to work 24 hours a day, 7 days a week, because as soon as they stop scalping, they stop making money. Trades like this make money while you sleep because you have a bunch of trades at break even and it's floating. They're floating. You're letting your winners run and you've reduced your risk. I don't mean 100 losing trades that you're going to take. No, you jam your stop at break even. And if you're scalping, you should know how to trade. And so your entries should be quite good. But then if during the pullbacks, you're going to lose a good percentage of your trades during the pullbacks. And then you re-enter new ones, and then you lose a bunch on the pullback, and then you re-enter new ones. So it's the same scalping, and over and over and over, you're selling lower highs. But the big difference is that you let the winners run. And at the end, when you exit everything at your target, okay, you'll have all of these, but you'll have, I don't know, let me make up a number. 10 times more pips than a scalper, but the whole time you're scalping. So what's the difference between two traders that are scalping and one makes 10 times more? Letting your winners run. You cannot be successful without letting your winners run. Okay? And the kids on YouTube that are dropping 5 standard lots on a trade, and they're like, look at me, I'm making $10,000 a day trading Forex on my phone. And look I have a yellow Lamborghini. It's childish. Okay? It's childish. It might be exciting, but it's not a mature way of looking at it. And it's probably not real. But anyways, let's move over to the DAX. Let's go to a 4H. Let's zoom out a little bit. Where are we going? Based on some technical analysis, this is a little risky compared to what's been happening. But boy, this has been a risk-off period here. Okay, now, this is typically, so if you go to quantbox.co, you know something like seasonality. And seasonality, for example, says, in that circle, you should expect the DAX to fall. What day, what hour? I don't know. But you should expect it. And I know most people here, most of you are QuantBox subscribers, most of you saw this coming before it happened. Maybe not particularly that week, but in that period, in the window. Okay, and the window was like fairly small, like, like there. Like, you had a pretty reasonable idea. And it happened. It's not unexpected. Okay? Now, the rest became disappointing and then it got worse. This, for example, is the Hamas attack on Israel. You know what was supposed to happen? This is what was supposed to happen. And we might be regrouping and maybe we get on with that plan. Okay? Maybe we're getting on with that plan. So if we were going to be technical, obviously this is a sell zone. But I think what might be happening is we're just getting back to where we should have been. This is bullish. This is bullish. This is bullish. And that maybe, just maybe, we just get going where we should have been going anyways. Okay? Return to splendor. Address unknown. Okay? So now we got to kind of read through the technicals and throw in a little bit of sentiment, fundamental sentiment. Okay? And so that we do something like this. Right? Could be a rabbit, could be. All right, share your sentiment. Type on for risk on, type off for risk off. On or off, on or off, on or off, on or off, on or off. Type it on or off, on or off. Let's see if we can get the chat rate above 10. Last time we got it to 8. On or off. Learn from each other. Find out what the sentiment is. On or off. You don't have to write a lecture. You don't have to write a paper on why. Just on or off. Are you right? On or off. Faster, 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 faster. Learn from each other. Learn from each other. Yeah, we got to 14. Cool. Thank you for that, everybody. I appreciate you. Okay, very cool. So we did the Euro, we did the DAX, we did the Nikkei. I won't do ASX today. Richard says, no major news today. No, the major news is going to be tomorrow. CPI is going to come out low inflation. No way. I want to check oil just quickly. Good, great. It's a nice sign. Okay, stock market's open. Ding, 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 ding. Let's go to the U.S. stock markets. Ding, 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 ding. What should we do? S&P? Okay, so where do we want to identify the dip zones? Okay, you want to buy a dip? Okay, we're going to get market open volatility. Let's see, how important is this? Nah, let's just change it. Let's go to... Okay, what do you think? What you want to do is connect a lot of these tops. See, like, here's one way of doing it. Okay, you saw a couple of tops there. You see a couple of tops here. You see some tops and then some bottoms. So a top, a bottom, a bottom, a bottom. Okay. And these are prices that could be important in the future. Okay, there's a bottom, nothing, sort of a top, sort of a bottom, sort of a, yeah, right? Maybe something there. Again, this is just you identifying support and resistance. And in this setup, I just have it draw it for you, right? These are called pivots. No, not the, right? No, not those. Or no, they call them fractals. They're fractals. Turning points in the market. So anyways, if you were a bull, for example, what do you basically want to do? You want to buy a dip. So the question is, well, how far will it dip before you buy it? Is it going to be like one of these? Okay. Or is it going to be all the way down here? Well, if it's the blue one, there's a problem. If it's a blue one, it sets up a reversal pattern. Okay. So if you're a bull, you're not planning for that yet. Bears are waiting for it. So you really got a plan A and a plan B going here at the open of the U.S. stock market. Meta says low inflation, ha 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 ha. Well, let me share my point of view on why I said that. When I analyzed Europe, it showed inflation there had dropped precipitously. And the only thing, Meta, that fell there, inflation-wise, was energy. And it fell dramatically, but everything else was up. But the headline number was low. And of course, to us as macroeconomists, we know that if inflation fell in Europe, it had nothing to do with what the ECB did. It's not a policy. It just happened. Chance? Happened chance? Is that a thing? It was by chance, not by design. Which means, well, if energy skyrockets, then they're going to have high inflation. But it's not that like anything is working. And so if I took that logic and let's just say we're waiting for the Fed stuff to work, the Fed has done a lot, what's CPI going to be like tomorrow? And I'll say, well, taking the same logic from Europe, if energy is down, well, then our headline number is going to be down, even if everything else is about the same. And that'll give maybe, again, I'm not saying it's an A+ for the Fed. I'm just saying it just happens to be. But it's dangerous to believe it's policy, right? So Eurostat. Let me see if I can find that document. I did this at Investor Boot Camp on Tuesday. So we did it a week ago. So I emailed it. I could probably find it there. GDP down. That's the wrong one. And I forgot Eurostat likes to do everything with PDFs. Stupid Eurostat. What kind of, like, why isn't it all live database? It just, yeah, anyways. Polski, Deutsch, Espanol. Let's see if I can find this. Except all. Well, let me just find my email. I do something called the week on the street. So now I got to bring up my email. Wrong email. Problem is I got 5 emails. Maybe it's on this one. And right? week on the street. And not this email. I don't think so. Hang on, I have a copy. It's a nice email. Core harmonized index of consumer prices year over year, maybe? Yeah. Okay, I found it. See, it's nice to have all this stuff documented. So if you join Investor Boot Camp and then upgrade to a live group, any live group, we meet on Tuesdays and we go through the data like this. We actually go through the data, y'all. Okay? So here's where I'm getting at. Okay, based on this analysis, Meta. Okay, Euro area annual inflation down to 2.9%. Oh la la, hard to believe, right? Hard to believe. So what happened? Food and alcohol went up, tobacco went up, industrial goods went up, services went up. So how do you get a low, right? How do you get a low number? Energy collapsed 12%. Sorry, 11.1%. Down for 2 months in a row. Because it was -5 and now it's -11. Okay? But look, that's the one thing the central bank can't do. This is why you do core. They tell you, this is what somebody typically says. You want to look at core because food and energy is too volatile. What kind of nonsense is that? Of course, that's not true. Central banks look at core because their policies don't impact energy or food directly, right? Maybe indirectly, but so this happened and lowered inflation dramatically, and it had nothing to do with the ECB. Prices are actually still very high. So you can go through these numbers, but I'll just show you almost 8% food, alcohol, and tobacco, which is 90% of what Europeans do. Okay? 5% here. Okay? It's high, man. It's high. So anyway, I'm taking that same logic of maybe energy is going to pull our headline down. And then everyone's going to say, the Fed's done, it all worked. I'm like, well, the Fed will, in that situation, a low CPI, would make sense that the Fed's not going to raise in December. But it doesn't mean our inflation problem's over. It just means oil prices are down. And all you need is something to go wrong, an exogenous shock. And with an exogenous shock, you could just boom. Hey, guess what, everybody? Inflation's back. In particular, on top of medium inflation. So let's say everything is farting around at 3.5, but it looks like 2.8 because energy's down. Well, boom, this could very quickly jump to 4.0. Okay. No. What I'm saying, Meta, is it will pull the headline down. Okay. And that Eurostat is just, was that Eurostat? I think so. I got rid of it. But it's just the numbers. It's just statistics. So you can do core or not core. But most people pay attention to the headline number. So if CPI in the United States comes out 2.8 tomorrow, they're like, 2.8? they're instantly going to say the Fed's done. The response would make sense. Like, the stock market's going to probably rally. That makes sense. And that decision isn't the wrong decision. But remember, there's only 3 decisions: buy, sell, hold. So they're going to say, oh, low headline number, inflation not a problem, Fed's done, buy the stock market. And they're probably right, but actually still probably wrong. Now, Pavel says now the Fed's not done. They might be done, but what he keeps saying, what Jay Powell keeps saying, and this is what I'm getting to, if oil goes to so we're at 77, and I bet long. I'm really just hedging. If oil goes to 99, okay, headline inflation will rise. And because of that, the Fed raises rates. Because of that, the S&P 500 falls. But that hasn't happened yet. It's going to happen in the first quarter. So right now, energy's down and the stock market's up. Oh, awesome. Everything's good, everybody. Everything's good until it ain't. Okay? Until it ain't. So if now oil prices go from $77 to $80 today, we're going to have a down day in the stock market. And you might be looking at, the first available buy would be closer to here. Now, Richard says, the problem is, ... Well, in this case, it's sentiment that we're talking about. So, you're right on the eco side, on the economic side. But what we're really now paying attention to is the market side. Okay? But if oil is rallying, that'll kill your disinflationary period, and then the Fed ain't done anymore, and then the stock market comes down. So you got to be ready, willing, and able to hedge that. Okay? And I am. I almost hedged yesterday or on Friday. Okay? But you see how if you're a bull, this gets interesting soon. Okay? It gets interesting soon. But it better giddy up. Otherwise, it's a long way to the next one. Okay. Cool, right? We good? We still got a lot of work to do. I suggest we do some currencies. And then I suggest we review your trade plans, and so you can get feedback on your technical analysis. Pavel says the bond auction failed last week. Demand was low. 2-to-1 bid to cover ratio. 2.2. There were 2 bidders for every buyer, right? The issue is, what was their bids? Right? So yes, if you put your car on eBay Motors and you get no bids or only two bids or something, yeah, it's not going to sell, right? So the next thing is, what if you got 1,000 bids? Well, then there's a much better chance, right? So, right? But what if each bid was $1 increment and you're selling your Porsche? You're like, well, the bidding is up to $1,000. You're like, I'd like at least $100,000, right? So the next thing is, what are they bidding? Are the bids going up $1,000 at a time or $1 at a time? So anyways, they had a bid to cover ratio of 2.2, but they weren't bidding very high. So the Treasury had to pay higher rates. Okay. So anyways, guys, you are in a zone that might be a buy zone, so you could be dropping into different time frames and watching for buying opportunities. Okay? I'll leave you at that. So why don't you, I'm going to go get a Cherry Coke Zero, and you are going to type the currency pair you want me to cover. And I'll come back and we'll start doing some of that. Then, once I've shared my thoughts, then we'll zip over and I will review your trade plans and give you feedback on your trading technical analysis, which is really, think of it as a mini mentorship. Huh? So post your trade plans at tradeplans.ai. So I will pop that there. And that's the plan. So I'll be back in, I don't know. How much time do you think we need? How about I'll be back in 2 minutes? I guess we'll leave it there. I used to have a little intermission screen, but I guess I don't anymore. All right, back in 2 minutes. For what asset, BMA? I haven't received that feedback from anyone else, but maybe. Boy, base, how low can you go? Death row. What a brother know. Once again, back is the incredible Rhyme Animal. The incredible number 1. All right, actually number 0. It's good to have one serving of fruit every day. That's why I drink my Cherry Coke Zero. All right. You ready? What currency pair do you want me to cover? Yeah. No, never met her, Michael. All right. What trade plan? What currency pairs? Type in currency pairs. We'll go through it technically. Making the music abuse it, but you can't do what you know. What you gonna do? Forex not afraid of you. Beat us for Sonny Bono. Beat us for Yoko Ono. I'm probably going to get like a copyright slap, huh? Okay, thank you. Euro dollar, Euro USD Swissy, Euro kitty cat. Oh, is that right, Jim? It doesn't like Firefox. I didn't know that. So Michael says, have I ever done hot yoga? I actually know somebody that owns a hot yoga studio. So maybe I need to go over there, but it's kind of weird to hang out with my friends all wearing spandex. Interesting, Jim. I'll have to yell at the team. But they're not good on front end, so yeah. Okay. All right. Anything else? All right. Let's start with the euro. Let's take a look. Euro dollar. Obviously, we need to do that. Okay. We're in the middle of this strategy. Not even the middle, but, well, we were in the middle. We're supposed to come up to this zone here, which I've already highlighted. And the next move is a dip, a rally, a dip, and a rally. Okay. Andreas, I might have already done go. Oh, sorry. I forgot you were over there. Sorry. Me. 20 dwarves. All right, let's start again. The pink is the strategy. What's the strategy? Let's do it like this. What's the strategy? Strategy is big. 50% predicts a 1382. That is what we're going to do according to the strategy. Doesn't mean we're actually going to do it. But if you don't have a strategy, then I don't know where you're going. Right? Okay. Now, if you're a bear, cool, man. Cool. Pretty simple. Okay. So, are you a bull or a bear? Okay. So, we'll zoom in now, just so you know. And what we have done is we have climbed all the way back to the 200 EMA. That just happens to be an M2, M4 pattern, which is how to swing trade. And now we're at this junction point. Bears are going to try to do this throughout this week and next week. That's what a bear would do. Now, this 200 EMA that we're at, or we're just touching, that's the fair market value. So the euro is actually worth 107. Just a little more than 107. We'll even call it 107 and a half. That's what the euro dollar's worth. That's the fair market value. It doesn't tell us if the bulls are in control or the bears. In fact, here's what's actually happened. Bears on this pair were in control. And then bears took profit. Technically speaking, you may say no one is actually buying this. Okay. Technically, I would also say it's kind of a 50-50 chance from here. And I don't like 50-50 chances. But at the very least, pick a team. Okay. As I said, Andreas, I think we already covered that. But if I'm wrong, not a problem. So I think this is 50-50. And the thing that's going to lead the charge is the dollar. And the thing that's leading the dollar is, well, Fed policy and the potential change in Fed policy, but measured by, let's just say, the stock market. So low inflation, Fed policy paused, stock market rally, dollar weakens, euro dollar up. And that's a soft landing scenario. Do you believe in that? If you can't answer it, then you don't know what you're doing. I'd rather you be wrong than not know what you're doing. You might say, nah, everything's going to be worse. All right, well, then you could trade that. See, if you're like, no, Wayne, I believe things are going to get worse before they get better. I'm like, I get you. And you might say, oh, well, geopolitical risk and a bunch of things. Like, the government's going to shut down in a week. Okay? So you're like, no, this is coming down, Wayne. It's going to get ugly in the next 2 weeks. Thank you for your opinion. I appreciate it. That's how you would trade it. I wouldn't trade it yet. But if you got something like, let's say, from here to here, yeah, then the following week would have a high probability of that. Okay. So the narrative has been up, but is technically on the daily not ready. I don't know why my phone is going jonkers. When I look at it, it doesn't look important. Somebody texting me? No. Cool. So anyways, we can change the time frame and see where we are. And it's saying the same thing. It's really lost a lot of steam. Lost a lot of steam. And notice that the trade plan, okay, for the month was buy at 105, expect 107 and a half, and then it's done. It's done. So you're like, well, what about euro dollar today? You're like, what do you mean today? It's done. You're done. Ish kaputya. Okay, so what happens next? Well, the trend might continue, and that's not a strong conviction. But you could try one of these. Sure. But the other thing in play is the counter trend. This suggests that. Are they the same? No, because then it sets up this. Ooh, so which one's going to happen? I don't know. That's what you're doing today. Okay? You either get it to roll up or you roll out. Wait, is that a Ludacris song? Okay, so which one? I don't know, dude. But you're okay buying a higher low, but this pattern shows risk to that. Yeah. Okay, we had a Euro CAD request. The trade plan is well, it's not 149. So how about 148.5? What do you stink? Smell like a plan? We're riding the 4-hour 21. So that gets you a scenario like this. Now, it actually says you can go a little higher, but that's your call. Okay. Wait, Jens are on the move? Right off the double top. Thank you, Acidity. Now, what tends to happen is it tends to snap back. I still like to measure them. So they're protecting 152, huh? So this is great for Andreas, I believe was the one he said he was interested in selling pound yen. And he might say, oh, I told you so, I told you. Well, this had nothing to do with your trade plan. And it still has everything to do with yield curve control. So I will still argue you need to understand yield curve control if you're doing trades like this. Yeah. So the yield on the Japanese government bond probably hit 1%. So let me do this. 10-year JGB yield chart. Maybe that'll... No, nowhere near, unless it just dropped. One day. No. So the number we have to worry about is 1.0. And we were maybe at 90, huh? Not even, 88 and some change. Shouldn't be that big of a deal. It looks like it's profit taking. Okay. It's profit taking off the top. Okay. So it's interesting where it could be right back tomorrow. I'm going to change the chart, even though it was so beautifully done. I'm going to switch it over here. Uh, 303, the Minister of Finance has suggested unlimited. But what they have told us is the yield on the 10-year Japanese government bond. They will allow everything to float until 1.0%. And we're only at, what was it, 0.88, I think it was. So nowhere near. So that leads me to think that this is not an intervention, but a top. It's profit taking. Okay. And so I showed you that giant double top. And now I'll show you, this is the right shoulder of the double top. Okay. And this is support, by the way, y'all. So one likely outcome is this. Okay. Another outcome is buy it at the moving average, take it north. Okay. But you can see it pops and it consolidates. Look left, drag it right. This is how I teach you. Look left, drag it right. So eventually, like your plan, if your plan is buying this over the next couple of weeks, then really what will happen at some point is this will be your buying price. Okay? That's your price. You just don't know what time. Time is down here at the bottom. So at some point, it'll come down, it'll break, it'll pull back, and now's your time. The price is obvious. What you don't know is when. So higher high. You expect a higher low, look left, drag it across. Okay. Higher high. Look left, drag it across. So now what you're doing, ladies and germs, is you're waiting for the new higher high, and I've already dragged it across. It's just not this week. Or it's tomorrow. This is me predicting the future. That's how you trade. What if I'm wrong? Well, your most recent trade will probably fail. If I'm wrong, what you will recognize it, and that's a big benefit to proper trading, because knowing you're wrong is much more important than guessing that you're right. Okay? And you get a change in direction this way in that scenario. And you better change your behavior. Yeah, that's okay, Andreas. Yeah, the thing is, you don't want to be an innocent bystander. Also, here's the thing. What I'm trying to get to with this is I don't want you to believe if you took that trade that somehow, and I don't mean this in a negative way, so please bear with me here. It wasn't your genius. And the risk is, if you thought it was, you could be throwing down 3, 4, 5, 6, 7 additional trades that will not work out well. Right? Because you may not know. And this one was good. I mean, but like, dude, there was some profit taking. Now, you might say, well, I took that trade. So again, from my humble opinion, that would be a counter trend trade. And once again, not ideal and such. So like, I'm glad it worked out. I'm glad you're profitable. That's good. I mean, it really is. But the cliche is throwing down a bunch of other sort of somewhat random trades and find out that they don't work. And the problem with luck in trading is it takes you, like, you do it once and you're a genius, but it takes you 7 losing trades to realize it wasn't, right? Like, it takes us longer. I'll give you like another example to hit home this point. Let's go this way. Maybe even weekly. Okay. And I'll do one click in. Okay. So this goes back to March. What direction is this trend, Andreas? Up, down, or sideways? Everyone, you can answer. Everyone else answers. Is up, down, or sideways? Everyone, please answer. Can we get the chat rate up to 16 this time? The peak last time was 14. Let's see. We went from 0. Come on. I know it's a rhetorical question, but you're answering to yourself. Just waiting for this number to click in. Can we get higher than 14? No. Sorry, guys. Average. You're average. Sorry. Oh, everybody had a chance. All right. Well, thank you for that. Well, I won't say range or consolidation because we clearly have a positive slope in the mean. Okay? And if you prefer to use moving average crossovers, if I had a 2155, it would say up. It's up. This is up. So in my humble opinion, and of course, remember, I'm trying to teach. I preach to teach, because some of you never had this. Number 1, born without a gun. I wasn't licensed to have one. Yeah, you like that? The minute you see me, fear me. I am the epitome. A public enemy, used, abused without clues, and refused to blow a fuse. They even had me on the news. Yeah. Okay. It's up. So don't sell it. Don't sell it. It's up. The odds are in your favor when you buy dips. And you should spend most of your time figuring out at what prices you wish to buy this and what you need to see to stop buying it. But amateur traders seem to want to counter trend. I don't know why it's so easy to counter trend and so difficult to just trend. Okay? But in my book, I talk about counter trending as twice the risk, half the reward. So I want you to get to like a process in which you say, this is up, I'm a buyer. You have to start building that habit now. Okay. All right. Last chance for you to post a trade plan at tradeplans.ai. I am now going to give you feedback on your trading. Okay. So again, go to tradeplans.ai. I'll look at Forex, stocks, futures, crypto. You like the crypto? We can do that. I saw, Angel, that I didn't see that you posted, but I saw people posted. So if that was you, I got you. Okay. Anywho. All right. You guys ready? Kick boasted. Boom, boo, doo, doo. All right. All right. So this trader selling pound yen. Andreas. Well, I don't know if it's Andreas. All right. So I just hit this hard. This is an uptrend? No. Now, this is technical analysis. I'm giving you feedback on technical analysis, not fundamentals. So you might say, well, but Wayne, if you look at the yield on the 10-year JGB, blah, 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 blah. No. Technical analysis, what do I see? Sideways, higher high. Sideways, what's next? Higher high. Okay, now it might do this, but it would probably need to go like this. So I'd say you drew it in a way I disagree. So you're bearish on the pound yen. I don't mind the pound and all that, but I say niet. Okay, that technical analysis doesn't make sense to me. All right, let's take a look. Kitty CAD buy. Kitty CAD. Well, CAD is weak, especially with energy down, but maybe energy's up now. Maybe everything's different. My oil trades, right, gonna help me buy a bigger yacht. So what do we got? Okay, a bit of a range there. Okay, and then a breakout, and then a pullback. Yeah. Okay. 30-minute. All right. So my advice to you, anonymous trader, is that you probably want to look at, wait, this went to R1? No, weekly R1. Let me think. R1, M1. I was going to say maybe use a 4-hour 21. But other than that, no, I'm going to agree with this one. That one's fine. Okay, boom. Oh, I always forget. All right. Bitcoin. Yeah, all right. Oh, I know this price. Yeah, I know it well. So, in this big move, a client paid me in Bitcoin, and I think I got right. It showed up right there. And then by the time it cleared, I was here. And I worked all Thursday and Friday to get it to about here. And I exited around there. Is that even right? Yeah. I mean, I'm looking at the price section. I can't quite see the price. I think it was 37,100-ish, sort of in there. And if you were a bull, yeah, there's a concern to this. Like this volatility throws everything off. But if you were going to ignore that, so there's a new feature that most of you probably haven't quite seen yet on MT4, but you can erase your history. It's cool, right? Yeah, and we can redraw it as, you know, like this, like that, and call this a higher high. Cool, right? These trades didn't happen. You just erase it. Cool. Okay, so if that didn't occur, it seemed pretty reasonable. I don't like, I mean, on the hour, it's okay. What this chart is actually suggesting is that it's going to take a little bit of work. I think it's going to be like this. It's essentially waiting for the 4-hour moving averages to catch up. So it smells like tomorrow. Okay. And just one other piece of advice. If you were only trading this time frame, this 55 often means this. And you'll see, like, when the 21 was in control, we're making higher highs. Then the 55 became in control, no higher high. 55 still in control, so you can get rollover on that time frame. Now, what I think is happening is it's waiting for the 4 hour. So I pay more attention to the 4 hour than I do the 1 hour. Okay, so I'm okay with it, but I think you're probably early. But that's a bit of a guesswork, so I'll generally agree. Okay. How am I doing? Am I doing all right? Looking at the yen, euro yen as a buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 through the moving averages, buy. Well, what I want you to note is, okay, you really want to buy at these moving averages. I want it to be a key part of what you're doing. And these moving averages are higher than what's been drawn. Okay. So you have a higher high. Do you buy a higher low at a roll reversal? Yeah. 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 Now, to know you're wrong will look like this. Okay, but that hasn't happened yet. And so at least you'll know when you're wrong and you can manage your risk that way. So I agree. Now, by the way, ladies and germs, if you were doing this on other people's trade plans, if you did this like I'm doing this now, like literally did the exact same exercise, you opened up these charts. What are they doing? Are they buyers? Are they sellers? What does the chart say? What indicators? What time frame? What price? And analyze it and think it and then vote it. I would suggest, in my humble opinion, 10 times better than trading on a demo account. Firing off a bunch of random trades will not make you a better trader. I don't care if it's 1,000,000 random trades. What makes you better is patience and discipline. And now what you're doing is an intellectual exploration, right? You're challenging your brain. Any idiot can fire off a bunch of mediocre trades. But to put some time and some thought and to challenge your brain, and remember, your brain wants to be intellectual, even if you're a hillbilly. Okay? Your brain loves puzzles. So the more you can feed it with challenges, you think, what are they doing? What's the setup? What's the currency pair? Do I like this pair? Do I like this direction? Is it bullish or bearish? What does the price action say? What do the moving averages say? What do the pivot points say? Do I agree? What pattern would make me disagree? And oh my gosh, guys. You're feeding your brain. And remember, your brain does not know the difference between reality and a thought. Your brain sits inside your skull. It has no access to the outside world. Your fingers provide the touch. Your eyes provide the light. But your brain is isolated from the real world. It doesn't actually see. But your brain can conjure up images just as real as reality. This is why you probably get frightened when you have a nightmare. Well, it's just a dream. Okay? This is when, if you ever played a video game where you had to climb way up top of a tower or way on top of a building, and you actually get afraid, your heart starts racing, and you feel like, oh my God, I don't want to fall off. Like, I play video games all the time. So for sure. And it's amazing. It's not real. You're sitting in your movie theater playing video games. You're not afraid of falling off of a high building, but yet you are. So your brain doesn't know the difference. It's just as real. So this is a better way to trade because it is real, but it's intellectual. So did I agree? I already agreed. Yeah, way better than a demo account. You're not going to learn by using a demo account. Oh, I forgot to buying gold. Buying gold. Buying gold. All right, what's the trend? Okay, what is the trend? Well, let's try this. Okay, even though this is an obvious question, it's rhetorical, I understand, but I want you to communicate with yourself. Is this trend up, down, or sideways? Please type it in. Please type it in, up, down, or sideways. You can type in side, up, down, or side, up, down, or sideways, up, down, or sideways. Come on, guys. There should be dozens and dozens just flying in here. Up, down, or sideways, up, down, or sideways, up, down, or sideways. Come on now, you're answering to yourself. Remember, you're probably here to learn. Okay? Look, I am making you rich. If you came to this YouTube channel to get rich, I'm teaching you just how to do it slow. Okay? Okay? Acidity, it's technical analysis. You're either developing your technical analysis skills or you're not. Okay? Anyways, look, thank you for answering, by the way. We only got to 9 this time, not 14. All right, this is range bound. Going back all the way to June, this is range bound. And to add insult to injury, it's halfway through. There's no real direction here. Okay, so, well, it might bounce here. See, that's the problem. It might bounce here. It might bounce here. We just don't know. And why do we buy gold, guys? What's the most common reason people quote their reason for buying gold? This person is buying. Jim says inflation. The other Jim says hedging inflation. Any other answers? What's the number one reason people will be quoted for the reason to buy gold? If it's inflation, type inflation. Come on, guys, faster. Come on. Type in an I. Just type in an I. TT says weak dollar, but what does that mean? Inflation. Weak dollar is inflation. John says risk, but what risk? Yeah. All right, lots of people don't know. Inflation. Okay. So I've already made a prediction for inflation tomorrow. Low NFP. Those are all different measurements of sort of the same thing. I predicted low inflation tomorrow. So there's no need to hedge inflation if inflation is falling. Okay. Another way of looking at it is, inflation at 3.8 minus productivity at 4.9 means XAU down. Okay. Fundamentally. Now, if you were going to try to buy it, probably closer to 19 would be better. But when we looked at the trend, that's really hard to tell. So if you're going to use this chart, this is the buy zone. And that's the most aggressive trade you can make, the middle of the range. What I'd rather teach you is not the most aggressive trade, but more conservative trade would be better. So it could work, but this idea here is a trend trade. Okay, that's how you trade when its market is trending. And as I've already covered, I don't believe the market's trending. It's a good strategy in the incorrect market conditions. So look, it might go up. And so one of these things too, guys, is if this goes up, you'll say, oh, that Wayne, he's stupid. He said no to this. I'm looking at the probabilities. Does this make sense technically? Even if this goes up, it doesn't make sense technically. Okay? So a drop of like $35 is incredibly likely. And what'll happen is you'll get stopped out and then it'll roll back up. So I believe it's early based on these market conditions. And I believe that that's a trend trade inside of a range-bound market. And that's just dangerous. Especially if you do it over and over and over and over and over and over, right? Cool. Aussie Q. Kiwi, really? Wow, that's a confusing one. All right. So 2 weak currencies, 2 commodity currencies. What do they want to do here? Sell. Wow, really? Kiwi. So Kiwi is the most bearish currency on the planet. Maybe not in the moment, but between now and next year, they have the most dovish central bank in the modern world. John says, hey, man, how many pairs should we focus on? I answer this in my book. There's a whole chapter. And it's called The Greenback Guru. So I said, don't focus on pairs. It's not the way to trade. Focus on one currency. And in your first currency should probably be the reserve currency, the US dollar, because it's the most important. Then you learn fundamentals and you learn how to do relative strength exercises. So when the dollar is strong and expected to remain strong, you'll do a relative strength exercise and go find something weak, like Kiwi. And on days that the dollar's strong, you sell the heck out of the Kiwi dollar, weakening the Kiwi and strengthening the dollar, or vice versa. Then suddenly maybe euro is the strongest. So you buy euro dollar and you sell what you expect to be a weak dollar. And you get all this expect to be, right? The expected return of a currency is going to be directly proportional to its monetary policy. Cool. So like I dedicate a whole chapter to that. So you become the master of one currency, decide whether that currency is going to be strong or weak, and then the rest is just technical analysis. So like under that logic, I would look at Aussie Kiwi and I'm like, I don't get it. I don't understand why you'd want to trade this. Okay. So Aussie's weak, Kiwi's weak. Why are we trading this again? And I'm also very bearish on the New Zealand dollar because of the future projections of this currency over the next 12 to 18 months. So sell it. Okay. So I get, so anyways, this is where I get lost now. So, up, down, down, up, okay. Down, up, sell, technically bearish, down, up. Okay, down, through the neutral, back to the neutral. No. And what time frame is this? See, here's the thing. It's just as likely to do this as sort of this. And there's got to be something better going on. I mean, let me instead of being so pissy, let me try to okay, there's a double top. Okay. That's an exit zone. This is a sell price, M3. Okay, but see, here's the problem. This is a buy zone here, and we got a bullish. So I can't determine based on this information that this is going to fall. Technically or fundamentally, it's just a giant question. Just I mean, like, okay, like for example, this price as a bottom suggests this is where we're going this week. Minimum. Okay. Okay. So I'm like, yeah, no, it's not good. I think it's going to lead to inconsistent results. That's all I'm saying. I think that'll lead to inconsistent results. Okay. Thank you for posting, everybody. I appreciate that. I hope you enjoy what we're doing. I hope you find this beneficial. Pound CAD, week and week. Buy. All right, let's go with it. All right. All right. So QuantBox says neutral. Okay, and that makes sense. Bottomed out. Okay, breakout. So I'm okay with the direction. What this chart says, well, it's similar to here, but it says be prepared for this. Okay, be prepared. But up, 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 down, down, buy. Up, 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 down, down, buy. Ooh. Yeah. I think it could probably go even a little bit higher, but that's psych level at 170. Again, the problem is, like, technically this is fine. I don't get why you would want to trade pound CAD. And that's where I kind of get, like, really? But anyways, yeah, so I'll say it for a third time. This probability exists. It's pretty good probability. Because it's a psych level, because of the moving average, because of this, like the up, the failure of a higher high, the size of the lower low. There's quite a bit of rationale for it to almost get to 170 and then come crashing down. Okay? To whoever this is. So is that reasonable, though? I guess I'll agree. It's like, yeah, I guess I'll agree. It's probably something that I don't think I would have even looked at it. Okay, like fundamentally. I mean, even the fact that this is neutral, so you're buying dips, I'm like, really? Okay. Okay, let's do some gold. They're bears. But they're all buy. Whoa. I thought they were bears. Gold sell. $19.63. Go. They want it to go high. Okay, so it's not this trade. Let me double check that. Target 1822. Okay. Stop 1988. Ooh. I don't like the 1888 part. It feels, again, to me like a trend trade in a range-bound market. See, what I don't understand is how they got to the conclusion that it can't do this. And that takes them out. Not only does that put them in, it takes them out based on where their stop is. And it doesn't even change the direction. Like, And then they're long here off that. Right in the middle of the range. I'm trying to think this one through. Like, I don't think this one's going, the buy is going to work, but if it did, I don't know why you'd want to sell it there. So I guess we should identify what we'd want. I would want for you to buy down here or sell up in here, right? So my first thought is, what do I want you to do in the middle of the range? Nothing. And so we have like, sell that. So I believe they're doing a Fibonacci retracement role reversal type thing. I mean, it hasn't done that in the past here. Lower low, lower high, right? Lower low, much bigger high, then the down, and then the down, and then way down here, and then way up here. And now, like, really? I would have to have a bigger conversation with this trader. Generally I sense that I don't like it. I mean, I get that, but yeah, I guess based on their trade, they're saying this, but if the market did that, they'll get out. But I think it could do that. You see what I mean? Like, I think that's actually pretty plausible. Like this. And they're right on direction, but, you know, so, and then they're long, which throws me off. So I'll respectfully disagree, but I'm sure we could have a decent conversation about it. But for the sake of a conclusion on there. Okay. Euro Norway. Noki buy. Okay, I have some concerns. Okay, we're near a top. My next concern is, I'll have to zoom in for this. Okay, so it's near resistance, that's one. And then I'll zoom in here. And we got to be careful because, you know, a full 100% pullback, and that's nearly one, shows weakness. And like, I'm not watching the stock market, I'll have to look at it, but let's say if WTI went up, S&P 500 would fall. Okay, dollar would get strong. Euro dollar would fall. Okay, so Euro Kiwi down. But if WTI is up, Brent is probably up. Okay, which means it would probably be up for Noki. Norway, there's no way like Norway. And so that would, okay, put Noki up. And we convert all of that logic into, dude, there's a pretty good chance that it does this. I mean, like, if that went up, it would have to do it like right at that price. Pure price action. And I don't see it. See, the way I look at it, how about this? Let me tackle this. Does this look like a top? Then if people start seeing this as a double top, it's going to make some people take profit. So now, if I see some weakness here, like a big rally, but 100% retracement, then I think I must, as a risk manager, be prepared for that. Okay. So again, like, guys, I don't know. I'm not watching this right this second, and maybe it's skyrocketing. We're way up here. I'm trying to teach you how to read your charts. Okay. It's too bullish, too close to a top. You buy dips, but you got to see that as a double top. Okay. All right. So I'm losing viewers. So I guess I've gone too long. It's 11 o'clock. This has been how many hours? 8 to 9, 9 to 10, 10, 11, 3 hours stream. If you could, would you please click the thumbs up button? Oh, and let me one more thing. That just happened.